Hello everyone, welcome back. I'm here with another trade review. So this trade was taken on Wednesday, the 24th of July. It was a crude oil trade. Um, Profit was $5,400. It was a very nice trade. It was a very quick trade. I think we were in and out within 11 minutes. Um, and it was just textbook. There was very little wasted movement. It did exactly what it needed to, and it's just a great example of what my model is, and sort of just the way I like to view price. It was lovely. So yeah, let's dive into it. So crude oil. So this trade was taken on the Wednesday, but as always, every day you want to just at least start your analysis by just looking what we've done so far in the week. Just trying to get an idea of what the narrative is, what the storyline is behind the movement for the week. So far, all we'd done all week, we'd opened up and we'd just been dropping. We'd opened up on the Monday, dropped lower. We'd had some relief higher, which had been daily immediate rebalance, and then we'd dropped hard on the Tuesday. Tuesday had taken this pool of sell side liquidity and it stopped right on this low, which if we go out to the daily is also the premium high of this daily fair value gap. So it's accomplished quite a lot on this day. We've dropped hard, we've taken a big pool of sell side liquidity, and we've created an area that retail will be looking at as a strong area of support, because they love to see double bottoms. So yeah, we've taken this sell side. So even if we didn't have this, the fact that we've taken a large pool of sell side liquidity is enough for me to want to see some form of relief. So we've had a big drop. I either want to see the rest of that day or the next day offer some relief higher, and then we'll make a decision as to whether it wants to reverse and keep going higher, or if it just wanted to offer some relief and then continue coming lower. But the fact that we have this double bottom in here means I have a good idea of what the next play is going to be. Meaning, because we've set this up, there is now a lot of sell side liquidity below this low. So I'm expecting some form of relief, and then I want to see it come lower. So that was my mindset coming into the Wednesday, is I was looking for us to give some relief up to some form of premium array, and then I wanted to see it come lower. Now I've already got it labelled, but the first and most obvious area where we'd like to see it come up to is this hourly imbalance. I saw this immediately. It's in a premium. As you can see, it's above 50% of this range. It overlaps with, it's just underneath consequent encroachment of the daily wick, which is there, which is the midpoint of this wick. This is just underneath this. So yeah, there's a lot going for this PD array. If we get up to there, that's where I'd like to see lower prices be offered. It might want to come higher, but this is a good place to, it's a strong area where we can expect bearishness. So let's go down to the 15-minute time frame. So this is where we are on the 15-minute. This grey line is the sell side liquidity we've taken. So we took that, and as you can see, in this move lower, there's lots of like little highs. So typically, I think I've said this in all my videos so far, I really like to see us taking liquidity and then coming up for some swing highs if it's bearish. If it's if we're looking for bullishness, I like to see it take buy side liquidity and come down for swing lows. But all of these highs, especially if we go down to the 5-minute, all of these highs will have stop losses above them. From the people that were short from here, they will have their trailing stop loss is above these highs. Also, people that bought at this level will have more buy stops above these highs. And because we're expecting lower prices, we want to see it come up and trigger these highs, so they get triggered into their buys, because we're then expecting it to come lower, and this is where their stop loss is going to be. So we come off this high and we just sort of fiddle around here just below equilibrium. So that's how we know that tomorrow, so Wednesday, is going to keep going higher to search for a PD array, because we haven't yet come up to equilibrium yet. So Wednesday opens, we immediately start trading higher, and we run right to our hourly fair value gap. We take out 3-4 swing highs in here. So at this point, I'm not married to anything yet. I'm not married to a bias, but I would like to see bearishness offered from here. And that's exactly what we get. We immediately get displacement lower. We get a 5-minute fair value gap here. We rebalance it, lower. Rebalance the fair value gap, lower. So we move lower to take out this swing low. We move higher to pair that liquidity. We've taken sell side, we pair it with buy side. And what do? We continue coming lower. So our next target is this sell side and this sell side. We hit all of that. In fact, we come all the way down to the lowest sell side we took was this, just about. So we've taken a lot of sell side liquidity in here. Now this is around 3:20 p.m. So if we're going to see lower prices on like a large scale, we're going to need more news, because this is fairly late in the day, and it's done quite a lot. It might not have moved a lot in one direction, but we've actually accomplished quite a lot. We've taken out the buy stops here, we've retraded to a premium PD array, we've turned around, we've come lower, and we've taken out a lot of sell sides. We've actually done quite a lot in the day. And if we look at the news of the day, we had a lot of news this day, but after 3 p.m. we had nothing. I mean, yeah, we had Canadian dollar press conference, but most of the news is done for the day. So I need to see some reason for it to want to continue lower. So when you've had this determined run lower, I want to see it shake itself up a bit. And it does that perfectly by coming quite high up to take this buy side. Now this buy side is important because this was the one that took this. So anyone that's short in here or shorting below these sell stops was kicked out here. So this is quite an important high. Normally, if we were to take a high like this, it would mean that we're coming lower. However, as you can see, we've got our hourly gap still here, which it doesn't expire just because we touched it once and then moved away. This is still, you can still use this. You know, if we were to get above this, I'd look to see if we can come back down in and then get a break higher. This is still a valid level. So we shake things up a bit. We offer some buy side up to here. So people that think this is bullish because we touched this, they think this is just a retracement and then we're going to come higher. But we come up, take this high. So at this point I'm on the 1 minute time frame. So yeah, we move up here, offer some relief, and then we come up to take the high. Now what do we have in here? We have a fair value gap, and we have a volume imbalance. Now these two are important because at the moment of taking this high, these two are untouched. This fair value gap here has already been used to go higher, so we're not really interested in that. And yes, we also have the order block here that overlaps with both the fair value gap and the volume imbalance. So If we were to come higher, I would want to see us use this value gap and this volume imbalance. So I'd want to see us touch it and then continue higher. But we're not bullish. I'm bearish in this example. So the fact that we've taken buy side, this isn't a break of structure that I'd expect us to come back down in and move higher. I'm bearish. So when you're bearish, anytime you take buy side, you're viewing that as a move higher to allow more bearishness. Because anyone that's in a short here, you want to kick them out. That's how the market works. It wants to make each move as exclusive as it possibly can. So if you've got a strong idea of a direction, for example, if you're bearish and then you see it take out buy side, don't view that as a bad thing. Don't view that as, oh, it's just broken structure in the wrong way, it's going to start moving that way. It's kicking everyone out. It's telling you we're about to go. People that don't know what they're looking at are going to panic, and they're either stopped out or they're just going to panic and close their trade. But that's a good sign. That's what you want to see. That's moving higher to go lower. So that's exactly what we had here. So at this point, I'm just waiting for the signal for it to tell me, okay, you can get in now. And that's typically in the form of a break of structure lower. So they're most likely going to offer you your entry without taking any swing lows, because retail could enter off that. So when you look for your break of structure to tell you, okay, we're done going higher now we're going to start giving you some entries to go lower, you want to look for it to break PD arrays like fair value gaps or volume imbalances or order blocks. You want to see it close below mean threshold of order blocks, you want to see it close below fair value gaps, and you want to see it close below volume imbalances. And then you can enter off any one of those when it comes back up to touch it. So I just kept it simple. I highlighted the fair value gap because it was the first PD array. And when we're up here, I said to myself, if we come down and close below this, I'm going to enter as we return to it. See, that's exactly what I did here. We close. This candle gives you a lot of information because we close below the fair value gap and we close below the volume imbalance. So you could have entered on the return to either of those. I entered on the return to the fair value gap. So then we had quite a long wick on this. So this candle here, the candle I entered on, we have a long wick and a long tail. And it closes below mean threshold of this order block. So at this point, there's no reason to expect bullishness. You can enter on a return to mean threshold of the order block. You can enter on a return to this volume imbalance. You can enter on a return to this volume imbalance. You can enter on a return to this fair value gap. Or it's created a balanced price range, which I'll discuss that in a second. So this candle, we have a long wick. As you can see, the bodies respect that perfectly, along with respecting this PD array. So when you have this type of structure, the wicks can do a lot. You know, the wicks can come up quite high, but the bodies tell the story. So there's not a single body that even closes above this. Doesn't even put a body in this fair value gap. So that's a good sign that you're on side with the marketplace. So we enter here, we come up, we lay some bodies in the volume balance and on the consequent encroachment of this wick, which is now a defending PD array for your position. You don't want to see this break, and it doesn't. We then are told that we're not about to move yet because we have this tail here, and you want to see consequent encroachment of this break, and then you'd expect it to fly lower, but it holds that, so it's telling you we're not moving lower just yet. and it gives you a big wick up to this balance price range. This is your last opportunity for an entry up to the balance price range. If you're waiting for this volume balance, you're being too greedy. You're not getting that entry. But it's telling you here, hang on, going to offer one more entry. So you could have entered here, here, this volume balance, this order block. It's your last chance for entries. And then we close nice and low. I thought we were going to close inside this volume imbalance, but it's eager to go. So it closes below that. And then the very next candle is when we rip lower. So my first partial was here for sell side liquidity. So I took 23 contracts off here. I think I entered with 28. Yeah. So we took majority of the position off here. Then I took my next position off here when we completely filled in this 1 minute fair value gap. So I took 3 off there, so I have 2 contracts remaining. I then took another 1 off when we'd filled in this gap and this volume imbalance, because at this point, as soon as we touch the low of this volume imbalance, we filled in everything from here. So it's very unlikely that you'll move higher from there, but it's accomplished something at that point. So that's when you could see some form of retracement. Ideally, you just want to see it hammer lower and come for the sell side, but it's worth noting that if you notice that you start to stall around this level, it's probably worth taking something off, because that's most likely when you're going to see some form of retracement, or God forbid a full-on reversal, because it's accomplished something. It's filled in all the imbalances from this run higher. So I took off 1 contract. I mean, yeah, my fill wasn't great. I was a bit late on it, but the idea was we'd filled in everything, so I wanted to take something off there. I left 1 contract running, hoping we'd come down for this sell side where my profit was. I had my stop loss into this fair value gap because I wanted to see this be a breakaway gap. So when you have 2 fair value gaps and you want to see it move lower quickly, you typically only want to see it touch the bottom one. So most of the time it's safe to put your stop here, because if we come up into this, that's actually not that good for bearishness. I don't actually want to see that. You want to see it be in a rush to come lower. You want to see it almost saying, I don't have time to come up for this. I'll come up, touch this, and then I'll go lower. So that was the thought behind it. But yeah, we did come up and touch that. Perhaps I should have put it above consequent encroachment of that, because if it does come up there, you at least want to see it leave some of it open, and it mostly leaves half of it open. But I was confident it was going to come lower. It didn't. Stop me out. Doesn't matter. I've already had a profitable trade. And then yeah, you can see we ran lower. We didn't come all the way lower like I expected. We came for this sell side, and then we actually came higher again. So yet again, I think I've had to say this in all 3 of my trade review videos, my overall longer term direction wasn't correct. We didn't get to where I was expecting it to, but you don't need it to. You know, I don't need it to get all the way down here for me to have a profitable trade. You know, even if we never actually got here where my take profit was, I've still had my entire trade. I still made $5,400 from this entire trade. That's why taking partials is key. You can't just wait for it to go to your profit every single time. Or, you know, imagine if I was holding it for here, we would barely even got halfway. But yeah, you can't be greedy. You got to take what it gives you. Right, let's just go through dollar quickly. I'll go through what I was thinking for dollar, because I've said this before, I'm constantly looking at dollar, and I typically don't make a decision until I've got a good idea of where dollar's going. So, my thoughts for this week on dollar. So let's start from the Monday, which is here. So dollar, to finish last week, had taken this big pool of daily sell-side liquidity. That's a big sell-side liquidity pool. Now, what do I always preach in my videos? When you take, for example, sell side liquidity, usually the first thing it wants to do is come back up to pair that with buy side liquidity. So I had this high labelled at the very start of the week. This is where I wanted to see price come to. I didn't know what we were going to do for the rest of the week, but I wanted to see us come for this high first. I didn't have any idea other than us coming up for this high. So we did that on the Tuesday. We didn't take it by much, but we did touch it. And then we touched it one more time, late on the Tuesday or early hours of the Wednesday. We took this buy side here. We took buy side again here. We then dropped to take out the sell stops here. And then Wednesday morning, we came up one more time. So this is 3 drives higher into this buy side. So even though it's not run it by a lot, it's taken it enough and sort of kicked people out enough for this to be considered a run on this buy side liquidity. So if you remember, we have a lot of news on this day, so you can expect quite a big day. So we take this very important level of buy side liquidity, and then we have a big drop lower, and we take this sell side and we engage in this sell side. So anyone that had buy stops above here, their stops are below here and here. Kick them all out. Now look at the time of day. It's on the 5 minute. At 3:05 or 3:30, we've accomplished pretty much everything for the day. We've taken a big level of buy side liquidity, and we've taken quite a big level of sell side liquidity, and all the news is done. By 3:30, all the news is done, and we've accomplished a lot. Most of the time, 8 or 9 times out of 10, when you have those signatures, news is done, had a big move, and it's accomplished a lot, you're not going to see much more movement for the day. Most of the time, you can expect it just to sort of drift back into the middle of the range, or just straight up consolidate. And that's what we did. We the rest of the day slowly drifted up into the middle of this range, and then waited until tomorrow to take the low. So when we get down here, my entry was at 3:39. So we've taken 2 levels of sell side liquidity. That's exactly what I'm thinking at this point. We've just taken it one more time. Granted, this isn't by much, but this was the main sell side liquidity pool, not this. So we've taken this here. What am I expecting it to do? I'm expecting it to slowly drift up back to the middle of the range. And when you're trading things like crude oil, you don't need it to mirror dollar exactly. So I don't need dollar to be wanting to quickly seek higher prices in order for this to come lower. I just need the sort of general bias to be higher prices on dollar, and that is enough to facilitate lower prices on something like crude oil. Things like Forex, like euro dollar and pound dollar, typically follow the dollar index a bit closer. So if dollar's sort of slow and lethargic, those will be slow and lethargic. But yeah, for something like crude oil, all I need is the idea and the bias to be in the right direction. Dollar can sort of do it in its own time. And yeah, pretty simple. That was it. We'd accomplished a lot, so I was just expecting us to float back up to the middle of the range, and that was enough for me to facilitate lower prices on crude oil. So there we go. I hope you enjoyed. Hope you hopefully learned something. You found it interesting. Let me know in the comments. And thank you very much. Goodbye.